The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Welcome to our August edition of our educational webinar for 12 points. We will wait about 30 seconds here and then we'll get started. All right, looks like we have 12 attendees as of now. We'll get going here. So first and foremost, I just want to thank everyone for joining this month. I know we're all very busy with all of our competing events that are going on with work and personally, so appreciate everyone sharing time and hope everyone's enjoying the end of their summer here. My name is Andrew McGill, and I'm a wealth advisor here at 12 Points. I work predominantly on the personal side. If I haven't met any of you, hello, nice to meet you. If I have met you, good to see you again. Thank you very much for joining. I've been at the firm since October of last year, so coming up on a year now. And one of the things when I was first interviewing with 12 Points I thought was awesome was the educational seminars. So I'm very proud to be hosting this one today. This is the first one, and we have an awesome guest that I'm looking forward to turning it over to here briefly. So Mark Gillette, who is a private client executive over at Fred C. Church, he specializes in insurance and specifically auto, home, renters, umbrella insurance. And I'll be turning it over to him in 1 second. One thing I wanted to share about Mark is that he spent the last 10 years working in the industry in asset protection. And he's worked with a lot of successful families, helping them acquire excess liability coverage, helping people with coastal properties, you name it. And our goal for today, I just want to be clear, is not to wow you with the information that we know, but our main goal is to help you with actionable information that you can move forward with, whether it be today, tomorrow, or in the future. And we want to arm you with that information today. And last but not least, this webinar is going to be recorded. So if you want to re-listen to it, you'll be able to do so. And with that, I'm going to turn it over to Mark. And what I will say is I'm going to be monitoring the chat. And so if you have any questions during any of this, please feel free to ask. We're going to look to go, we're going to be done at the half past the hour. And we can answer any questions after, but let's keep this light, upbeat. Any questions you have, feel free to use the chat function. So with that, I'll turn it over to you, Mark.
Thank you, Andrew. Appreciate the introduction. And everyone, as Andrew mentioned, thank you so much for taking some time this afternoon, especially during the busy season of summer, to spend time with myself at Fred C. Church, but also Andrew and the 12 Points Wealth Management team to learn a bit more about how we can help with your insurance and your insurance needs and provide you with some insights on what we're seeing over here in terms of market trends, in terms of coverages that we're speaking to our clients about, and just some overall great information to be well informed about to apply in your lives every day. So with that, Andrew, we'll go ahead and we'll kick it off. So in terms of what we'll be discussing today, just a quick overview of our topics. First is going to be the personal insurance landscape. Just a quick basic overview of the coverages that are out there, the coverages that are available to you, and just think about ways that you are overall properly protected. The personal insurance trends, what are we seeing in the market? What are we allowing, advising our clients on, things that we want to make sure is at the forefront of their minds when they're looking at buying a property, selling a property, and trying to look to protect their assets. Different coverages to consider. The market landscape is changing actively. So year to year, there are different coverages out there and some coverages you may not know about that we feel are certainly important to be included in the conversation. And then lastly, what does this mean for me? Some ways that you can, some action items take away today to apply to your own personal insurance for you, yourself, or your family. And throughout this, as Andrew mentioned, if you have any questions, we certainly want to keep this interactive. So please, enter in any questions to the chat box, especially if I start getting on a roll here. Please feel free to step in to ask any questions. So with that, we'll go ahead and we'll hit the first slide there, the insurance landscape. So these are all the coverages that you could potentially apply into your life depending on the coverages you may need. So we'll just do a really quick overview, and we'll first start with the homeowners and condo and renters. And we'll learn a little bit more about this. So homeowners insurance, kind of as it says there, it's coverage for your home. So whether you're purchasing your first home, you're purchasing your secondary home, whether it's a coastal property, this is the coverage that's going to provide coverage for the structure of the property, but also as well everything inside, but also your liability. So all of your personal property, the roof of the home, the siding of the home, but also if anything you're to be sued for, liability and such, all comes from the homeowner's policy. Below that, the condo policy. This is kind of a bit, as it may sound, is the condo policy if you were to purchase a condo. But some other things to think about as well too is making sure this condo policy works best for you. So whether you have a co-op or a condo, this could apply to both, but also as well too, you need a policy to provide coverage for the studs in of the condo. So think of your walls, think of your fixtures, think of your flooring, think of everything inside the condo. There's a policy for that. But in addition to that, there's also a policy if your master policy provides protection for the interior as well. It's more common than not that the master policy only provides for the exterior parts of the condominium. So that's the roof, that's the exterior walls. And at times, the master policy may include coverages for the interior of your condo, like your floors, your walls, your fixtures. That's something certainly you want to speak with your insurance agent about to make sure that the condo policy that you're purchasing best fits your needs and works along with the master policy, not against or doubling the coverage. And then lastly is renters. Oftentimes, people feel if they're renting an apartment, they may not need the coverage because they feel that the personal property may not be enough to really need a policy. And it's only going to protect for personal property at that location. But with renters coverage, it's more than that. It expands outside of your rental property that you're renting. Think about if your car was to get broken into and there's a theft of your personal property inside your car. That's actually provided protection by the renter's policy, not your auto policy. Additionally, as well too, it provides things like liability. So say you have a dog and unfortunately that dog fights someone or another liable situation, renter's policy provides you with that liability coverage to protect you for those things. These policies fit well for the individual who are just coming out of college, looking to get their first apartment. This is great for the individual that's in college, looking to rent off-campus location. But additionally as well too, it's for the individual that may be purchasing or renting a location for a secondary location, renting a property down in Florida, renting a property elsewhere. This is a policy that can apply to all needs for the rental situation. Next is auto policies. Now, this is certainly something standard. We all know the auto insurance space. We all know that we need auto coverages. But this one as well too, this can include golf carts and at times motorcycles as well too. Next is going to be toys. What I mentioned before with auto policies where it can include golf carts and motorcycles, sometimes they will get its own separate policy and you'll receive a separate policy just for the motorcycle or just for the golf cart. But this also includes as well too boats, campers, RVs, snowmobiles, and all the toys that you could think of in your life that would need protection. Some other coverages that would apply to your life as well too are valuable items. These are coverages that can often be included into the homeowner's condo or renter's policy. And most people think about this coverage for jewelry, for art, but it really has grown much more than that. So clients out there are looking to insure wine, antique specialty furniture. There's been a large growth of baseball cards and other sports memorabilia, especially over the past 2 years. And anything that's considered a collectible item in your life can provide coverage for through a valuable items policy. One thing I would certainly want to recommend on this is, especially over the past 2 to 3 years, there has been certainly an adjustment in values, whether it's art, whether it's jewelry, whether it's baseball cards. And we certainly recommend, if you haven't had an appraisal completed on these items in your lives, to take a look to have them reappraised to make sure that if you were to get the coverage, you get the correct coverage, or if you currently have this coverage, making sure it's adjusted to best fit your coverage needs. And then lastly, on this part of the conversation is dwelling fire. And what this is, if you look to invest in a property, whether it's a condo that you're renting out or whether it's a 40-unit building that you purchase to rent out, this is a policy that's going to protect that coverage for that location. It's going to accept the exposure of renting out the property, but also as well to provide coverage if there was ever a significant loss or partial loss to the property. On top of all this, we certainly want to make sure that we discuss an umbrella policy. So an umbrella policy does provide liability coverages for all aspects of your life, which is why this is placed on top of everything. So liability claims that may start from a homeowner's policy that may not have enough coverage from a homeowner's policy, a liability policy, an umbrella policy will provide additional coverage to that. Same for your auto and same for your toys and your dwelling fires. This is a policy to protect the wealth that you've grown over the years, look to protect future wealth, and if you were ever liable in a situation there and find yourself in a lawsuit, an umbrella policy can help alleviate any sort of payment or judgment at the time of a loss. And these can be things like someone falling at your home. This can be things like dog bites. These can be things that we're seeing more and more, like auto situations with cyclists, auto situations with pedestrians, and other at-fault auto losses. So this is to help protect that wealth that you've grown, help protect the assets that you are growing, and provides protection at that time of a loss. With that, we'll head into the next slide here, which is personal insurance trends. So these are the things that we're talking to our clients about, to give them a heads up about things that we're seeing in the market. And some of these things may seem pretty obvious, but things that we certainly want to make sure we're highlighting. And in this day and age, I'm sure you're hearing it more and more on the news. That's not a surprise, but to rebuild a home at this time over the past couple of years, whether it's supply chain issues, labor shortages, or inflation, the cost to rebuild your home has significantly changed. And coverages you may have first gotten maybe 2 years ago, 3 years ago, or 5 years ago may not be enough in this day and age. This is a really great graphic shown here from Chubb Insurance that shows just the increases over the past year of 2021, whether it's rough framing and lumber, we're seeing 34% on that, plastic and copper piping, 56%, asphalt roofing, 9%. And while these are small percentages at times, all add up, and unfortunately at the end of the day, really cause that change to replace and rebuild your home at the time of a loss or a partial loss. In addition to that, with labor shortage, it certainly has seen drastic changes out there. So with that being the case, making sure your home is properly insured to its true replacement cost is something we really are speaking with our clients about. It's something I certainly want you to be aware of, where the coverages you previously have may not be enough, and at the time of a total loss or a partial loss, may not have enough coverage to fully rebuild and replace at the time of a loss.
And Mark,
to the next
quick question
Yeah.
here, Mark. Is this something that that can be changed while someone is currently in their policy, or do they have to wait to the renewal date to check into something like this?
No, this is something certainly and that can be done midterm of a policy. And we're seeing more and more questions around this, and having that conversation with your insurance agent can really help provide you with an understanding of where you currently are and where you need to be. In terms of that, your insurance agent and the carriers all have the programs and tools needed to show you the data that is needed to properly insure a home of your home specifically. So it's something that could certainly happen midterm. It's something that can happen on renewal, but it's certainly something that should be a part of the conversation today and in the near future.
Okay, thanks, Mark. And I'll move to the next slide here.
All right.
There you go.
Perfect. Another trend we're seeing is just market difficulties in high-risk states. With us being in New England, experiencing colder months, it's no surprise that a lot of us like to go down to Florida. So whether yourself or a family member are looking to make that move down to Florida or the warmer states down south, they certainly come with a bit more difficulties out there. And the reason being is, as this is a great graphic shown again by Chubb Insurance, showing the amount of catastrophic losses that the entire industry is taking. And a lot of these losses are in these high-risk areas. So when we look down here, Tropical Storm Fred, Tropical Storm Elsa, down in the Florida areas, this is driving a lot of resistance to want to write more coverage in these areas, and less carriers are wanting to write more coverage there. So that's causing the carriers that are in these areas to essentially effectively raise rates, but also have tougher terms to qualify for coverage. Other areas like California, we're seeing in the out west, we're seeing a lot of severe wildfires. So California is certainly part of the conversation when we look at states that are high risk, at times more difficult to insure, but also equate to, unfortunately, higher premiums as well. And a fact that we're seeing from 2021 is 3 of the top 20 largest California wildfires happened in 2021. Additionally, as well, 21 hurricanes happened in 2021, and third highest total for the Atlantic hurricane season, behind 2005 and 2020. So with all of these weather pressures causing loss for these insurance carriers, providing a bit of difficulty out there in the space. Now, there are ways around it. Certainly being proactive when you're looking to purchase in Florida, looking to potentially move to Florida. Things about the home that you certainly want to be aware of is having a wind mitigation report. Having a wind mitigation report will provide yourself as a buyer and also the insurer information of how strong is the home during a wind loss. And that's going to provide information about the roof, the type of windows, the hurricane shutters. Additionally, as well, too, a 4-point inspection is often requested by insurance companies these days. Also, some other things as well, too, having a newer roof helps in the conversation. And also as well, too, including in hurricane shutters and hurricane windows are all parts of the conversation and parts of the review when looking to purchase a home in Florida that can help when looking to insure that property in Florida.
And one question I have, Mark, is when someone's looking for a new home, or maybe they're looking to buy a rental property and they go on Zillow and they see it's in a flood area, should they be going to their realtor to talk to them about that, or can they go to someone like yourself or their insurance agent just to find out really what's going on there and what is the risk?
Yeah, absolutely. So when looking to buy in these coastal locations, whether it's Florida, whether it's New England, whether it's in the Carolinas, being close to the water certainly is going to equate to a flood conversation. Having a proactive conversation with your insurance agent will help provide you with those bits of information that can help at the time of purchasing. So understanding the flood zone that you're in, understanding the elevation that you're in, and also understanding what the insurance market can offer for flood coverage, which may be required by your mortgage, can help make the process a bit easier and seamless for you as you near that closing date.
I will change
Perfect.
slides.
This will be perfect transition, as in the next slide is going to be about the flood insurance market. So we'll be transitioning to that slide here shortly. We'll provide a bit more update, as this is a very hot topic. As I've mentioned, it kind of blends in perfectly with clients moving to Florida and other coastal areas. But in the first time since its inception, NFIP, which is FEMA's flood insurance program, is taking a new approach and new rate for new clients, but also existing policyholders. Now, NFIP was originally generated in 1968. So this is the first time, and since then, they're really taking a look at how do we properly insure, how do we properly rate for this insurance, and how do we manage this process moving forward. So this has been in full effect since April of 2022, and renewal increases will have a cap of about 18% for primary homes and 25% for secondary homes. Risk rating 2.0 is a new rate factor for the FEMA product, and that does mean at times potentially rate increases. But additionally, what this is supposed to provide is rate adjustment and relief for others. It's a new look into the way each property is insured due to its risk, and also as well to non-high risk flood zones. So at times, some clients will see potentially an 18% increase or that 25% increase of that annual cap. Additionally, as well too, we're going to see clients as well to see relief on their premiums, and this is really what's called making an equal playing field for everyone in flood in this flood product, so that way it can sustain for the future. Now, while NFIP, the FEMA product, was at one point the only flood product, since then the private flood market has certainly become a solution for many. And at times, what that means is rate relief, a more competitive rate than the NFIP product, but additionally as well too a broader coverage for flood. Things that to be considered of is coverage for contents near basement, which is excluded by the FEMA flood program. FEMA and NFIP do require that your neighbors experience a flood or to be deemed a flood. With the private market flood, your individual property can experience a flood and still have coverage. In addition as well to some other coverages like loss of use and others could be part of that new coverage provided by the private flood market. So If you have a FEMA NFIP product, it may not be a bad time to consider looking at private flood markets or get a better understanding of how risk rating 2.0 is going to affect your flood coverage moving forward.
And Mark, is this product something that someone needs to be certified to put in place for their clients, or are there specific insurance agents that can put this in place?
Yeah, so NFIP, it's all about the insurance agents, the insurance brokers, markets of availability. So some insurance agents may have limited markets for flood, one of them being the NFIP. Some other insurance agents may have more markets of private market flood. So it does depend per agent, per broker on their market availability. I will say that Flood Sea Church, we think, will have a handful of options that we utilize for our clients, whether it's NFIP, private market for primary flood, or even excess flood as well too. And some of our standard market carriers as well can offer flood additions into the policy to help provide that broadening of flood coverage and more enhanced flood coverage options.
Okay, great, thank you.
Excellent. We'll head to the next page, and this is really just coverages to consider. I know I spoke about it earlier, but umbrella coverage is something I certainly want to drive home to everyone, that if you don't have an umbrella, it's fairly short money to adequately protect you and your family for your future wealth, your asset protection, and making sure that if you are in that liable situation, whether it's a car accident or again someone falling in your home, you have enough coverage to make sure that you're protected. Additionally, as well too, guaranteed replacement cost coverage is something that we're looking to add to all policies if they're not already included. What this means is, we think back to that slide previously of the rising cost to replace and repair a home. Guaranteed replacement cost provides that blanket of coverage that you are going to have your home fully replaced at the time of a loss. So if you are in a situation where maybe you have $700,000 in coverage for your home and it may cost $900,000 to replace that home, you have full coverage with guaranteed replacement cost. Water coverages, at times this is limited or maybe even excluded. So there's water backup coverage, which is water coming back up into your home, whether it's through the sewer line or supply line or through your sump pump failing. At times this coverage is limited to maybe only $5,000. And if you have a finished basement, this could be potentially a larger loss than that. So I recommend speaking with your broker or your agent to understand how much water backup coverage you have. Some carriers offer to the full limit of coverage, and that's certainly what we recommend. Additionally, as well to tie it back to the last slide, flood coverage. Flood is not covered on your standard homeowner's insurance policy. It's certainly something to be considerate of, especially if you're in a flood zone, but even in non-flood zone. Everyone is in a flood zone, but it just matters how much of a risk flood zone are you in. Additionally, as well too, if you worked on developing wealth protection, wealth management, you have a trust in place and that trust owns your home, making sure that that trust is recognized on the insurance policy. It's a little step and go a long way at the time of the claim. And then lastly is unlimited loss of use. Now, loss of use is the coverage if you are not able to stay in your home due to a loss. At times your policy lane limits you there. It's generally a percentage based off of the amount of coverage you have for your home. In this housing shortage, in this day and age, we are certainly recommending having unlimited loss of use, as it can take more time to repair or rebuild your home. And if you are on a limited loss of use number, that may mean staying at a long stay hotel, maybe downsizing to a rental property that may not be as comfortable as you currently are living in, where unlimited loss of use will find you another property in your same neighborhood, same city, same lifestyle, same type of living, same commute, same school zone, and not having to compensate on any of that, and have your life maintained moving forward as you're going through the rebuild or replace process. Additionally, as well too, some other coverages to consider that you should have are cyber coverage, and it's more and more prevalent in this day and age, and I'm sure you've seen it on the news, but unfortunately there are cyber hackers out there that will get into your systems, and they can financially cause trouble and potentially provide your system to be unlocked by ransom or hostage. It seems odd to think about, but it's certainly more and more prevalent in our day and age. Equipment breakdown, this is a coverage for all the systems in your home. Primarily the ones I think about are your HVAC systems, your supply systems, but also can provide coverage for your high-end stove, your high-end refrigerator, I myself personally had my own loss with this. This past year, I went to go turn on my heating system, and unfortunately, my furnace broke down. Thankfully, had this coverage, and that helped provide a replacement at that time of a loss. And then lastly is service line coverage. If you could think about the service lines that go to your property, like water supply lines, like sewer lines. With being in New England, we have some of those original systems in the country. And with that being the case, when those fail and you have to dig up your lawn, you have to dig up your walkway, dig up your fencing, there is a coverage for that. And that could be a costly loss of time that happens. And this will provide you coverage for that. And then last page here, what does this mean to me? What does this mean for me?
And I'm sorry, Mark, I just have two, sorry to interrupt, I just have two questions there. No, number one,
yeah.
I hear all the time on the TV, customize your car insurance or customize your home insurance. Do you find that a lot of the things that you've discussed have been cut off of policies because we're trying to save money?
I do see that, and unfortunately, more often than not, it is a situation where they may not have an active broker or an active agent in their lives to help them with that customization. And I certainly believe in customizing your coverage, but understanding what coverages you're customizing and lowering liability limits or removing essential parts to save on premiums certainly is not the way. In this day and age, having strong liability limits is one of the most important pieces to our conversations. And having an understanding of what coverages you may be removing when you customize can certainly cause detriment to your life if a loss were to happen and you didn't realize you're self-insuring now because you removed that coverage to customize that coverage. So unfortunately, with that narrative out in the space, we do at times run into situations where we're doing a review and that customized coverage left a client potentially self-insuring unknowing that they're self-insuring for a loss.
And then the one other question, thank you for that. The one other question I have is it true that umbrella coverage covers for things like, let's say your dog were to bite someone and you got into some sort of a lawsuit or something like that? Is that true that would cover that?
That's correct. Yep, that's exactly correct. So if you're in a situation where you experience a loss like that, whether it's a dog bite or any sort of liable situation, someone falling at your home is one I often use, or someone feeling that you are liable for their injury or their damages, an umbrella policy will provide that coverage. A common loss out there is the dog bite claim, and an umbrella policy would certainly provide coverage for that, depending on the terms.
Okay, awesome. I thought so. I was not sure. All right.
And then what does this mean for me? Just some last takeaway items here. I mentioned earlier, but certainly working with an agent that prioritizes proactive solutions. So I recommend, if your agent's not reaching out to you 30 days prior to renewal, and when you receive those policy documents in the mail, speaking with your agent and having an understanding of what happened last year versus this year, whether it's premiums, whether it's coverage changes, coverage adjustments, or new coverages in the market. We're talking about these trends that we're talking about. Having that discussion prior to your renewal date is certainly well warranted and certainly recommended, as that will help protect you and understanding what the kind of coverage you have and that level of coverage. Especially as well too, as I mentioned previously in our last question, working with an active broker, an active agent to work with multiple carriers to provide solutions to customize coverages through different carriers or through different markets. That helps provide coverages that best fit your needs, but also at the most competitive rate. The carrier that you're with maybe 3 to 5 years ago may not be the best fit anymore. And that could be because your life has changed, so your coverages have changed. Especially as well too, the market's very competitive. So having those conversations, if you're not having them every year with your client, having that conversation, if it hasn't happened in the past 5 years, I certainly recommend and encourage you doing so, as it could be an eye-opening experience having those conversations. Well, I know it's certainly not the funnest thing out there to speak about the insurance policy. Having that understanding and working with a broker that can help deliver a confident solution for you on a yearly basis is certainly recommended. Additionally as well too, we all are feeling the pressure of inflation and what can we do to help offset these costs, the increases that we've been talking about. Increased deductible options. If you're still with $1,000 deductible or $500 deductible on your homeowner's policy, there are significant savings for increasing that to maybe a $2,500 or $5,000 deductible. While that may seem at times $5,000 to be a large deductible, we're finding a lot of our clients are self-insuring for less. If you're replacing a piece of siding, if you're replacing part of the roof, we're seeing clients at times in this market potentially self-insure for those to help maintain a more competitive rate and stay more competitive in the market. Especially as well too, adding all safety features and protections to your home to get those additional credits and savings. So think of central fire and burglar alarm, like an ADT system, helps provide a great credit. If you have an automatic backup generator that's fueled by natural gas, that provides a great credit as well too. If you have a water leak detection system, or even better, automatic water leak shutoff valve, that provides a great credit, especially as well things as low temperature sensors as well, provide some savings to your policy. And then lastly, packaging all your items, all your coverages together in one policy or just one carrier to one broker helps provide the most favorable terms and premiums, getting those bundling discounts, those packaging discounts, especially as well too. If you have a claim, having one contact, having one carrier to settle all of your needs certainly makes it easiest for you at the time of loss. And with that, I certainly want to open up the floor to any questions. I know I ran through that there, and I'm sure I threw a lot at you, but certainly want to make sure if anyone has any questions that we address those and be able to take those away.
Thanks, Mark. And yeah, if anyone has any questions, they can feel free to type it in the chat box. And if not, thank you all for joining this afternoon. Have a wonderful rest of your week, and we will hang here for another 5 minutes and see if there's any other questions.
Thank you all. Appreciate your time.
We have no questions so far. Looks like people are dropping off. And if anyone has any questions, they can feel free to reach out separately. No problem with that.
Absolutely. If anyone has any questions, please feel free to reach out to myself or Andrew, and happy to address and help those any questions you may have.
We'll wait till 12:35 and then we will end this here, Mark. Okay, so with that, everyone have a great day. Have a great rest of your week. Thanks for joining.
Thank you. Have a great day.